us now to talk about fundamentals and markets. Deven, I'll come to you in a moment. Just listen to this list. Maybe you have some ideas. There's a small cap list, MSCI small cap list. Also, there have been very interesting names in the addition side. Sony, because it's on charts, I'd like you to pick up any one stock, the name which kind of stand out, at least in my eyes. DB Realty, that one has been included in the MSCI small cap list. ITD Cementation and J Kumar, these two infra stocks, and Swan Energy. Any of the charts you want to talk about which appear good to you?
Definitely, Ajay. The first stock, real estate sector has been quite on a dips on a sort of a market. So if we talk about DV Realty from current levels, it has given a sizable correction, and perhaps another 2-3% more correction on intraday will give you a good range to enter into a buy. So up to declines of 245, 250 in the range will be a good entry to re-enter and reinitiate the longs again. It has multiple support in the range of 240 to 235. So I think that can hold as a good support. Reinitiate the longs. It can certainly bounce back up to 280 levels. So I think this becomes your first pick, and looking quite strong also on charts as if it's a buy on dips. The second stock will be ITD 98, just a leverage of 2 points. You can buy on dips and it can bounce back to 340 and then again up to 355 to 360 levels. So I think these two stocks, a buy on dip strategy, is looking quite interesting.
Right. Okay. Devin, good morning. Did you manage to glance through the list of small cap additions in MSCI? I mean, it may just be called small cap, but these are biggish companies. Anything which catches your attention?
Good morning. Well, I have not gone through the complete list, but I believe that I think some of these companies have already had a good run up, and I probably may not want to name the companies with a valuation, but I feel that I think they have been entered into the mainframe list of MSCI, but they've had their own share of run up in the market. As I see it, I think many of these companies probably may demand some amount of inclusion into the small cap index. But I would feel that I think here the time is, I think, to be a little bit more watchful, careful. I think the market has followed significant amount of euphoria in the recent times. And as a result of which, I think their stock prices have probably factored almost FY26, FY27 kind of reason or the earnings. And that is what is required to be, I think, a little bit more watchful about, because in such situation when you give the forecasted learning, I think that you take forecasting into the price, I think today, which is 1.5 2 years from now, I think even if in this journey, if you make some errors or some disappointments in the earnings of the company, probably I think you will get significantly punished. Not I think the small cap company, but say for example, yesterday the results for Bharat Watch came in, the result for sale came in. I guess I think these companies have disappointed on the agility that they have created in managing the management of these companies. I still feel that I think they have got a good amount of opportunity ahead. Fact that I think their growth rate is not going to be superlative, their growth rate is going to be connected with the economic growth rate. So if economy is growing at 11-12%, I think GDP plus interest, I would think that I think the many of the PSU companies will have a growth of around 14-15% from here on. And there may be some improvement in the margins too, of course. But most of these particular possibilities today are factored into the price. So unless we have sharp correction into the stock, probably I think one is not going to buy into. I would remain positive about I think the energy sector. I would remain positive about the metal and mining sector. However, I think one would like to see the relatively sustained performance, I think on a quarter basis for putting more money into them.
Sure. What's the way forward, Devin, for those who are still stuck in Paytm and this at a time when you already have brokerages slashing their price targets all the way to 270 thereabouts?
Yeah, so I think the point is they have had their business model built on the UPI gateways, wherein I think they would be acquiring the business transactions and they would be bringing it to the Paytm bank. And that was the, I think, model which was working. Now, if the back end, the bank is going away, that means I think in the front end, the UPI transactions, they do not have the money in the business. And that's where I think the bigger challenge is that unless the model gets further revamped, which is not likely to happen in a hurry. Or for that matter, if RBI gives them a relatively more period beyond 29th of February and probably allows them to re-question their entire business model, then I think things could happen a little better. At the same time, I think the issues pertinent. So probably I would stay away from putting across any kind of projection at this point of time.
Deven, anything which catches your attention in good numbers? This result season, one or two names which stood out in terms of quality of numbers and the outlook in your eyes?
Honestly, I think many good companies have come up with numbers, but they are not performing. I feel that within the housing finance business, within the consumer credit business, companies like Bajaj Finance has reported good set of numbers. I think the stock price is underperforming. Companies like Reliance has consistently performed better numbers. The stock is relatively underperforming. Uh, Fortunately, I think automobiles, I think which were up till now not performing as much as I think they should have. But I think some of these companies have started performing well, including Tata Motors particularly. So that is, I think, a good sign. But on the other side, I think Ashok Leyland kind of companies, because of the ban in the stock in the derivative market, I think has started going down. So I think in my viewpoint, the fundamentals are intact for auto companies. Fundamentals are intact for pharma companies. They are intact for even some of the select other companies in different pockets, including the finance companies in banking sector as well. I think that the issue is related to how much money is getting into these stocks. I think the momentum money is chasing some of the small and mid cap stocks, whereas the fundamentally good stocks, I think they are not attracting enough amount of money. Should they start attracting better money, I would think that I think these companies which we have talked about could possibly have relatively better performance going forward on the pricing front.
Bunch of other names which are going to be in focus today, and a lot of earnings there. We've already flagged off Novelis. It's not so much about the operational numbers, but the capex which has actually been highlighted. That's something which is higher than the initial estimates. In fact, it's an uptick of about almost 64%. So that's something that may not really go down well with the street. The pre-open rates, by the way, indicating a very, very muted start at an index level. But I want to see what Coal India is up to. That came out with its numbers. SAIL came out with its numbers. There's, of course, BHEL as well as PNB, which have now been included in the MSCI India Standard Index. So these stocks also are going to be in focus. And then, of course, there are earnings coming in from, say, a BLS International. There's Phoenix Mills, which has come out with a very, very great set of numbers. There's Dilip Buildcon, wherein there's been a huge margin expansion as well. So these are your dhamaka earnings from within the small and mid caps. It's also imperative to check in on what the texture and color is for some of the big losers from yesterday. And case in point clearly being Bharat Forge, the fact that they downgraded their guidance going forward, that's something did not go down well with the street. And that's, by the way, I'm seeing another 7% of a cut coming in. Deven, what's the way forward for Bharat Forge now? You think another few odd days of correction and this would become a buy?
Well, yes, I think one would like to think that way. However, I think given the kind of guidance, which is slightly cautious guidance, and given the kind of fact that I think the stock has already had a run up, I would think that I think even if it corrects, I think, and recovers on the price on the fall that it has had yesterday, I would still think that I think it's not going to be a superlative upside as far as the stock price is concerned. Unless the market catches some euphoria ahead of election, that may be a different issue. But on the fundamental side of the company, the earnings and the growth of the company is probably fully factored into the price of the stock as of today. Maybe one will have to see how if the guidance gets improved in the subsequent year, because the business portfolio remains absolutely strong for this company, including for defense. And that is where probably one would like to believe that going forward, the guidance may become relatively strong and they may be better in a better position to execute the order book that they have currently got with them.
Growth moderation as soon as Q4 itself. And after yesterday's sharp correction, seems like some more sell-off is in store for Bharat Forge. Just want to check in on what the likes of a DRL as well are up to. Remember, this was the big buzzer yesterday, along with the Divis, Apollo Hospitals, etc. But yes, talk about losers, SAIL, NALCO, Hindustan Copper. Metal sectorally was one basket which did fall pretty hard in trade, and seems like that trend is going to continue today as well.